Welcome, welcome. My name's Amy Rose. I'm the CEO of the Digital Economy Council of Australia. Today, you are joining us at the Global Digital Asset Regulatory Summit, and we are about to take a very deep dive into custody, following another deep dive into taxation. So get your coffees out. This one is going to be intense. There has been a few changes to the regulatory landscape today that we've all just managed to run our eyes over. So it is a very timely conversation, and I'm so pleased to invite Jaime Lumsden, who is going to moderate this session alongside her panelists, Ryan Hodges from Zodia Custody, Lucia Uen from Cloudtech, Verner from Fireblocks, and Moses Lee from Anchorage Digital. We're really pleased actually to have a lot of our speakers today are our members, and it is one of the things that I wanted to briefly say, that we would not have these events if it weren't for our members and our sponsors who continue to support the association and these events. At the moment, it is a pivotal time, and we encourage everyone who is watching to contribute to the consultation that was released this morning, and also to DECA itself. Reach out to myself or to Alec, who will be joining in as the next host after the break, who is also our policy lead. Okay, without further ado, we're going to jump into that custody conversation. I'm going to bring Jaime up to the stage, and Jaime will introduce her panel. Okay, over to you, Jaime. Thank you.
Thank you. Welcome to our panel discussion on the Australian approach to custody. My name is Jaime Lumsden. I'm a partner at Hamilton Locke in the funds and financial services team specialising in digital assets, and I will be moderating this session. Joining me, I have Ryan Hodges, Managing Director and CEO of Zodia Custody, which provides digital asset custody solutions to institutional clients. Prior to his role with Zodia, Ryan has also held roles at CBA and Westpac. We have Lucia Uen, General Manager of Digital Asset Custody at Cloudtech, which aims to revolutionise financial services in Australia by making them more accessible, efficient and cost-effective through cutting-edge blockchain technology. Lucia has 25 years' experience in financial services and previously had a role at NAB, embedding DeFi concepts into traditional markets. Verner, Sales Director at Fireblocks, which, as we all know, provides secure infrastructure for storing, moving and issuing digital assets. And Shane has an extensive background in the banking technology sector. And last but not least, we have Moses Lee, Head of APAC at Anchorage Digital, which is a crypto platform that enables institutions to participate in digital assets, including custody, staking, trading, and more. It is the home of Anchorage Digital Bank, the only federally chartered crypto bank in the US. So we will be discussing custody in Australia, which until today we had no draft framework. Now we have a draft framework, but we still don't have any regulation that is live right now for how we manage custody for digital assets. So let's kick off and start with, why is custody for digital assets and custody regulation important? Ryan, would you like to start us off and share some thoughts on this issue?
Sure can. Thanks, Jaime. Look, my answer may split the room pretty quickly, but look, I think custody and regulated custody is really important here in Australia for a couple of reasons. But I guess the first thing, if you think about the Australian financial sector and what it's been through over the last probably 20 years here in Australia, there's been some really big challenges thrust upon it, and it's actually gone through those strong and robust, and we are very well known for that globally. And I think the reason I think custody is important here in Australia, and that regulated custody piece, is that, we want to remain known for that. We want resilience. We want, those really high regulatory standards. And the key there is so that investors can feel confident in their digital assets as they would do when they hold their money at a local bank and they get the same level of protection. I think it's important. And I think, just further to that point, regulated custody in Australia will enable traditional finance and those digital finance markets to work more seamlessly together. And I think, that's the key for us, is supporting, many millions of investors here in Australia that invest in digital assets today, the thriving businesses, the corporate treasuries, of course, the digital fund landscape, and, that sort of further piece of looking at institutional adoption, which I think will drive Australia forward.
Thanks, Ryan. That's some really great thoughts there. Obviously, clearly in favour of custody regulation. Shane, did you have anything that you would like to share on this particular issue?
Well, it's a big day for Australia, and I'm sure I'm not the only person to say that today. I was very pleasantly surprised at the news that came out this morning. I'm coming to you from Seoul, the Korean Blockchain Week. So to wake up to that news, our friend Steve Vellis shared that with me very early this morning. So I'm just thrilled. There's 440 registered digital asset exchanges in Australia, and we can only grow this sector when they've got concrete under their feet. And we're thrilled to be their infrastructure provider, many of their infrastructure providers today. But I'm looking towards the traditional finance sector as well. I see new market entrants since the election in the States last year, new market entrants coming at a hell of a pace into this space in Australia. From equities to traditional equities, traditional stocks, derivatives players, all looking to participate in this market in the hope that the Treasury's proposed legislation comes through. And when that concrete under the feet of the entire digital asset, crypto, and traditional finance sector is there, then jobs and growth, we all get rich together. We all enable the retail participants in this sector to be sure that their money that they invest in is safe when they invest it. So yeah, it's a great day for the sector, and I've been looking for regulation for 4 years since I joined Fireblocks, and yeah, I'm just thrilled today.
Your level of enthusiasm is self-evident. So that's two very strong views in favour of regulation. Was there anyone on the panel that had a different view that wanted to throw in, or we're all more or less aligned that regulation is a great thing for the sector? Looks like we're aligned. Ryan, your initial statement that you might divide the room might not have been as accurate as perhaps you thought.
Yeah, maybe the broader spectrum, not this room, but yes, absolutely. Yeah, you're right.
I think that said, whether you are for or against custody regulation, I think it's really important that whatever we settle on as a custody framework needs to be fit for purpose. It needs to be right for the digital assets sector. So how do we go about getting custody regulation right? Moses, perhaps you would like to share some thoughts with us on what you think are the important considerations in this sense.
Certainly. So Anchorage Digital has experienced regulation at the highest level under the OCC, Office of the Comptroller of Currency, under the Treasury Department in the United States. And we have been working in regulated custody for quite some time. And what we found is that not only in the US, but also in Singapore, that regulation clarity is much better than ambiguity. So definitely going back to what we've talked about before, some regulation is better than no regulation. Now, what kind of regulation is something that we should all think about? I think when I experience what's happening in the APAC region, I see two large grouping of regulation. One would be framework-based. And so you would say that the US now, as well as Singapore, is a framework-based regulatory regime. And then you also have prescriptive regulatory regimes as well. And so what I would like to see our industry move more towards is the framework-based type regulatory regimes, where that encourages innovation, whereas prescriptive regulation would make things more insular.
Thanks for sharing your thoughts. That was very insightful, I think, in terms of how we can look to build out a regulatory framework. Ryan, did you have some thoughts on this particular topic as well?
Yeah, I think I'd probably just echo what Moses said. I think, the benefit we have at Zodia, we operate across 6 markets across the world. So we have the benefit, similar to what Moses said, operating in some of those regulated markets, ones that are sort of more progressed, like Singapore, in terms of regulatory sides as well. So I think what I would say is, yes, we do need to be considered. We do need to, I would say be patient and just work through it properly and make sure we get it right. But also on the brief skim, I went through that draft paper. It looks like we are doing that. We are looking further afield outside Australia for how the rest of the world is doing it, and taking some good tips and cues there.
I'm impressed by the level of commitment that you had to get through some of it this morning, even if it was only a skim read.
I don't know if I'm as excited as Shane, but I definitely did have to have a read and listen this morning. Yeah.
Shane or Lucia, did you have anything that you wanted to mention about getting custody right that hasn't already been mentioned?
Look, I think regulatory clarity for the Australian market, as I mentioned, is way overdue and really welcome. I think the Treasury consultation today puts the Australian digital assets industry on a licensing trajectory on par with, as Ryan mentioned, other markets globally. I think that regulatory clarity comes with some responsibility, however, for brokers, for prop traders, for exchanges, for custodians, and any other intermediary. Hey, sorry, I've got that little echo that I was complaining about before. I think one of the risks here is that the market could consolidate. And we also expect TradFi to leap into the regulatory clarity and recognize the opportunity that is present in other markets today. We also see it interesting that Treasury seeks to expand the principles of digital asset safekeeping and settling for tokenized securities. And I think that's going to bring another opportunity to this market that Fireblocks is particularly excited about.
Well, from my point of view, I also read the draft legislation and the explanatory memorandum very quickly in a sort of 10-15 minute skim through. I was quite energized by it because Cloudtech is already an AFSL licensed custodian, so we have been required to comply with existing regulatory requirements under RG 133, and there are specific problems within that regulatory guide that does not translate well to digital assets, and because there are some very prescriptive requirements in relation to digital assets custodians. What I do like about what was released this morning is a very clear guidance on the fact that ASIC's minimum standards will need to be appropriate and proportionate to the size and type of what they call asset platforms, digital asset platforms, and that it should be focused on ensuring that customer assets are safely held and the consumer safeguards rather than being prescriptive. So going back to what Moses said, I think it's very important that we see go into the detail when we actually all have time to go through the legislation and when ASIC actually releases any draft guidance on it, that it is consistent with what the draft legislation and the explanatory memorandum actually says at the moment. And that is ensuring that it's outcomes-based, and the tests and the requirements will need to support innovation and ensure that specialist custodians like ourselves have the ability to grow with the sector.
That's some really useful commentary around how parts of the current framework sort of intersect with DeFi and perhaps don't always fit, and that we will have to adapt this for the future, which is a really good segue into our next question. And perhaps, Lucia, you'd like to start us off by speaking to this if you have some insights to share from your time at Cloudtech. But we do have a current regulatory framework for custody for TradFi, but it's not always fit for purpose for DeFi. So do you have any thoughts on what is not suitable, what we need to change? What are the considerations around digital assets that mean that TradFi solutions aren't always the answer and we need to build something different?
Yeah, I do think by and large, custodians need to comply with RG 133, which is the main standard or the main guidance from ASIC in relation to asset holders. And if we look back to how RG 133 came to being, it probably had the greatest revision about 2013, when after the all the global financial crisis, there was a recognition that asset holders are the gatekeepers, and they were holding at that time probably about 2 to 3 trillion of assets. So the whole standard was meant to give them some, was meant to strengthen the operational controls and guidances, and it's largely principles based. And from Cloudtech's perspective, we definitely firmly believe in meeting these standards. But where the problems are, like I said, in relation to digital assets, there's Section F, which specifically talks to crypto custodians. It is quite prescriptive in relation to the technology and the type of storage that we should be using. And I think once you prescribe specific technology or methods, then there's a risk that it becomes obsolete or misaligned with emerging technologies and practices. So that's where the danger is. We don't want it to be too prescriptive that it stifles innovation, because we know the technology within blockchain and digital ledger and digital asset space change quickly and evolves quickly. We don't want that. And secondly, the other problem area is in relation to minimum net tangible asset requirement. There is a requirement of a 10 million cash or cash equivalents. And the objective, as stated in the original RG133, was that they want to ensure custodians will have 6 months of runway of cash to operate in case of any failures. Now, if you look at traditional custodians, they operate in global markets, need to have access to global markets and settlement systems for all sorts of assets. $10 million would seem appropriate, but that's not the case in digital assets. And not many startups are going to have $10 million cash, in the bank. And none of us are going to need $10 million to support 6 months of operations, because we're all startups. We're very lean. So I think we need to have a look at, maybe the FCA's guidance in the UK around. They've got a consultation paper around having scaled financial requirements so that they can support smaller startups as they grow. That financial requirement grows. So I think there are a couple of areas that we definitely need to look at, and I'd be very interested in whether this draft legislation and the upcoming asset guidance supports that.
Hey, Jamie, if I could just add one point on one of Lucia's points inside there, and they're not extraordinarily well made, Lucia, thank you. The proposed legislation is silent on operational resiliency frameworks and cyber rules, and we've seen that be rolled out successfully in other geographies. I just want to make that point as well.
Yeah, no, that's a really good point. And obviously those things are quite significant when you're sort of playing in this DeFi space. Also, Lucia, your points around the financial requirements, that's definitely one that I've heard touted a lot as a potential issue. Obviously, ASIC does allow scalability in some regards for some financial requirements, but the question then becomes, what's the minimum threshold and can you reach it? So definitely some room for discussion there. Ryan, did you have anything you wanted to say about RG133 and whether it's appropriate for DeFi and what we should change?
No, I think those points are well covered by Lucia and Shane. And I think the only thing I would say is that when I was looking at this a few days ago, I was thinking about the traditional custody frameworks. And I think, those are really fit for purpose. They work in banks. They're robust. They're tried and tested. I think if we can get closer to those, I do think we need to look at, in terms of capital required for those pieces. But I think the slight nuances on those would be important around things like staking, things like, how do we actually understand key management? But I think if we could get closer to those, I want to say policies in terms of frameworks that the banks use, that would be really good for us as an industry. Because again, back to my point earlier, and I'll hammer it home, the closer we get to the traditional finance landscape and the stronger we are, the better for this industry long term.
I think some slightly different perspectives there in terms of whether we should be looking to copy TradFi or not. Given that we have a bit of a split in terms of what we think local Australian regulation is for TradFi, perhaps we can turn back to the overseas experience. We have touched on the overseas experience a little bit, and people have sort of referenced a couple of things where we can sort of take a lead. Are there, if you could take anything from an overseas jurisdiction, perhaps, and bring it to Australia, and you think that that would be a good thing for us to implement here, what might it be? And I might open this question up to everybody to sort of have a crack if they want. Moses, would you like to perhaps start us off if you have some thoughts?
Yeah, certainly. So for Anchorage Digital, we've operated as a federally chartered bank for our custody business in the United States. So what we've done there is use and operate within the existing financial regulations, the banking laws, and apply that to digital assets. And there has been great amount of partnership with the OCC to get that fit for purpose for digital assets. We are the first digital bank in the United States working through these issues there. So one of the things that are actually, you know, good, and then as an example of traditional finance law that is applicable for digital assets are things like proof of exclusive control. So in digital asset custody, most people never really think about that. What is proof of exclusive control? And so usually what that means is how the private key is managed, but then you also have to prove that you have proof of exclusive control for even backups. So the whole model becomes a lot more robust. So there are definitely good things within existing financial regulations that can, principles, I would say, of existing financial regulations that are absolutely applicable for digital assets. Our experience in Singapore has been a little bit different because Singapore has fit for purpose regulation specifically for digital asset custody, which came into effect last year. And we have been able to work with the MAS in shaping what the regulation would do in Singapore. There are parts that are prescriptive, but there are parts that are incredibly framework-based. I would say one of the things is asset support. So in digital assets, you definitely have Bitcoin, you have Ethereum, you have the majors, but then you also have lots of different types of digital assets on different types of technology. It takes an enormous amount of effort to, as a custodian, to support this from a security and technology perspective. And so being able to scale this custody business across not just Bitcoin, but other digital assets is incredibly important.
Yes, I've definitely heard some discussions around that whole issue of what is control for digital assets. Sounds like the experience in Singapore was quite promising for you. Lucia, do you have any thoughts to share on whether there's something overseas that you'd like to see implemented here?
Well, I certainly agree with Moses that we should leverage what is existing to the extent possible, particularly when it's applicable, like, you know, the principles-based risk management governance processes that we have in place that's been built over, you know, decades of traditional finance. I think that instills confidence in people, particularly as we integrate with traditional finance into our sector. But I think specifically on digital assets custody, you know, when I read the FCA's consultation paper that was issued earlier this year on custody services, I thought that was, you know, that's kind of like the blueprint for me, because it was very much outcomes focused. Like I said, they wanted to make sure that any regulation that the UK puts in place has to be technology neutral, focused on security outcomes, which is, I think, paramount for custody of assets, and also, as I mentioned before, allowing startups to scale so that the financial requirements are not so prohibitive to to specialist digital or crypto firms to be able to grow. Otherwise, we will all have to wait for the traditional custodians to come to the party and start looking after assets. So if we want to facilitate the industry to grow and for there to be confidence in the sector, we want custody providers here. We can't wait for the traditional custodians to come to the party and be ready. We're ready now. So let's support the industry to grow and do and provide the security so that investors can be confident in entering this segment.
Yeah, absolutely. I think we've had too much uncertainty for too long, and that's had its impact on the sector. Ryan, did you have thoughts on overseas wish lists?
No wish list, to be honest, but I think someone mentioned it earlier today, is just, I think what I would love to see is a closer alignment of Treasury and ASIC and other regulators in Australia. I think, in Singapore and other countries, they have one regulator there that's driving, and it's really clear in terms of objectives. I think if we could be closer aligned here in Australia, that would really help the industry. But in saying that, also very happy that stuff's coming out today, very happy that we're moving forward, so incredibly thankful.
Fragmentation can definitely be a problem sometimes. I think we've lost Shane. He seems to have dropped off. So that brings this panel to a close. Going forward from here, where to? We've got draft custody regulations. So we all have an opinion. And maybe, Ryan, you were right at the beginning when you said, you might divide the room. It seems like we did get a split in some views along the road there, in terms of what we think an appropriate framework maybe looks like. So if anybody has a view and wants to be heard, this is your opportunity. We've got a month now for consultation before consultation closes. So if you have strong views about what you think custody in Australia should look like, strike now while the iron is hot, or you may lose your opportunity forever. Thank you to all the panelists for your contributions to this session. Very, very valuable. Thank you very much.
Thank you, Jamie.
Thanks, everyone. It certainly will be a group effort, Jamie, responding to this consultation. Everyone in this room will have some phone calls from myself and the rest of the team asking for your input. So thank you so much for joining us.